Ladies and gentlemen, thank you for joining me. This is Christopher Aaron coming to you post-Fed meeting on Wednesday the 16th of December. This is a critically important time period in the precious metals, in the wider markets, and I thank you for joining me. I'm going to move my video here as we get started. And we are looking at a truly historic event that is occurring. This being the rise of the key interest rate for the Federal Reserve for the first time in the last 10 years, raising rates. Now, the range that they are establishing is between 0.25 and 0.5%. They're giving that as a range, which means they are going to keep some flexibility in moving those rates around. However, the critical point to take away from this is that rates are now rising for the first time in the last decade, almost. And secondly, it is my analysis that this interest rate rise will be the first significant shift in that policy for basically the better part of the last 35 years. If you look at the last 35 years, interest rates have been falling from 1980 to today. And this rise should represent, from the bottom at 0%, the beginning of a stepwise action of rising interest rates again. Now, why is this so critical? Because rising interest rates usually correspond to rising gold and silver prices. This is an article that I wrote about a week and a half ago for the Gold Eagle website. And I go over some detailed analysis on specific periods of time in which interest rates rose and we could see precious metals prices rise at the same time. Now, the fundamental backdrop for something like this would be that the Fed is basically forced to raise interest rates once they have printed enough money and the dollar is on the verge of turning lower. So they wouldn't raise the interest rates unless they absolutely had to. And what causes them to do that is that all the money they've been printing in the last number of years with the artificial suppressed low interest rates is about to start flooding into the system. So they say, okay, we have to start doing something to encourage people to put their money with us. So we'll raise the interest rates to stop the inflation that they believe is going to be coming. So that's why gold prices tend to rise as interest rates are rising. The gold prices are telling us something. You can check that article out. I'll have a link to that on my site if you haven't had a chance to read it already. Now, looking today at the action, I'm going to move my video to the other side so we can see this. Looking today at the action after the Fed meeting, the decision. We are looking at the 6, if I would label them, major asset classes in the world for today. We are looking at silver, the U.S. stock market, gold, the U.S. dollar, U.S. bonds as a sum, long bonds, and a basket of all world commodities. So we're looking at how did these various asset classes fare after the Fed decided to raise interest rates. And you can see here, leading into today, this is a one-day chart, leading into today, silver rising, and finishing, for that matter, the strongest out of all of these asset classes. Gold rising as well, but finishing third, slightly behind U.S. stocks, which is very interesting to note that stocks continue to power higher here. The U.S. dollar and U.S. bonds finishing fairly flat, the dollar at exactly 0%, and U.S. bonds finishing at negative 0.2%. And finally, commodities as a whole finishing down about 0.5%. So what can we determine from this chart? This is just one day of price action. But sometimes one day we can see trend changes that are starting to emerge. Something is happening here with gold and silver that is very different from the rest of the commodities basket. Now, these ETFs that I'm using to represent all of these funds, including the commodities fund, which is ticker symbol DBC, these ETFs represent the underlying instruments that we're talking about. So DBC for commodities includes not only gold and silver, but oil, natural gas, corn, copper, platinum, palladium. A lot of the other industrial and soft commodities are in this fund. So we can see very clearly gold and silver moving higher today away from the rest of the commodities. So something happening where they are taking on some sort of a monetary premium today. But today being an important day in the grand scheme of things, a historic day as the Fed rose interest rates for the first time in almost 10 years. So let's see if this becomes a trend. Zooming into silver, we see that nice close for today, getting back above the $14 level. Looking at that on a 1-year time frame, we can see that rise here right at the very end. Now, I just want to make sure everyone understands what's happening on this chart, what these different lines mean. There's a lot of new subscribers, and welcome if this is your first time here. If you've been following this work for the last few months, I thank you for sticking with me. We are looking at, here is the line of the commodity, this line right here, in these black and these red segmented lines. Beneath that, these spiky lines, also in black and red, which correspond to the days here on this chart, these lines are volume lines. So here we have price, and here we have volume. And I know for some people this is going to be really basic, and I apologize. But there's a lot of people here who their first study was not charts, and their first study is the fundamentals. And I thank you for looking at the charts with me. It's my opinion that the charts show us a lot of really important data. They don't always explain the data. They don't explain the fundamentals, but they show, like a map, what is happening to the fundamentals. So anyway, we have these volume bars sticking up here behind the price. And these lines, anytime you see these colored lines, these blue lines, the teal line showed right here, these are my own lines. This is my own analysis of the market. So here we can see teal lines are short-term trend lines. Blue lines, royal blue, are primary trend lines. And then also on this chart, we have the black horizontal support and resistance lines. Some other colors that are not on this chart, but that will be on some future charts. So we are looking here now at silver shown over the last year, and the volume, how many contracts traded hands on a given day. So when we see a strong move in silver, if we see a spike in the volume compared to previous days, that's sort of a double strong signal. That's showing not only did the price rise, but a lot of people participated in that price rise. So that is a stronger signal than if we had one of these small bars here on the volume indicator, which would mean, yeah, the price rose, but there weren't a whole lot of people participating in that. So we had a pretty strong day in silver, trading right around, that looks like about 50,000 contracts today, plus or minus. Certainly not the highest day, but well above the lows. So a strong day in silver. We're zooming in now to Silver Wheaton, the strongest silver mining company. And it's been in this uptrend for the last 4 months. Keep in mind this uptrend. We'll switch to the 6-month view for silver. And you can see silver having that recent breakdown before the recovery today. So the major takeaway is that Silver Wheaton, the strongest silver miner, has been outperforming silver, the commodity. Now, this is not a recommendation to go buy Silver Wheaton necessarily. It may be a very good investment over the next several years. Really what I'm saying here is that you can see the mining complex outperforming the commodity itself. Since the mining complex has profits which are leveraged to the price of silver, they often tend to lead the price of silver in either direction. So we were watching that from the last slide, and we're seeing here this weakness in silver looks like it's not going to last too much longer based on that continued outperformance in the mining complex. Another piece of data as to why that may be so is the wedge pattern we've had developing here for the last number of years. And you can see within the primary blue wedge pattern, a smaller teal colored wedge pattern. Now these wedge patterns are bottoming patterns when they form after a long decline. So we are looking for this to break out from the short-term pattern some point here in the next 4 to 6 months. And if that breaks to the upside, that would also be a breakout from the longer-term wedge pattern. And then we would have a very strong indicator that silver has found an important bottom for this 4-year bear market that's been going on. We're looking at gold. Stronger on the day, not as much as silver though. We're still below the recent lows for gold, still forming this new low, churning below the July lows shown right here. The gold mining complex holding above the July lows. So again, this outperformance continues in the gold mining complex relative to the price of gold. Just like with the silver to silver Wheaton ratio, this often leads the price of gold. So another clue. And here again, we are looking at gold over the last 2 years. This nice, beautifully defined channel that we've been bouncing around, sloping downward. And we are looking for the possibility that this final low that's forming in here may be the last one for this bear market. It's not 100% yet, but it is sure looking increasingly like that as time goes on here. And we see this outperformance from the mining stocks. We see silver forming its own bottoming pattern. We see what happened today to the price of gold and silver. We see the trend change forming in the interest rates. Good signals forming here in the precious metals. So I'm not going to spend any time going over the long-term charts. I usually reference these at least once a week. I will bring them up probably in the next presentation again for anyone that's new, but I just wanted to put them here in the background as we look at the summary for this week. We're watching the rise in the metals just beginning as interest rates rise. Of course, this doesn't preclude one final drop lower. I maintain open ideas for that possibility. That said, we are approaching a very important long-term bottom. These lows form by exactly what's happening now. People getting worn out. How many people do you know who are still in the precious metals? Personally, not online or on YouTube, but how many people do you know? If you were to ask people at a local kids soccer game or talk to people at work, how many people are buying precious metals right now? It's not a whole lot. So people are getting worn out by this, and that is a major sign of a bottom. And again, we have the sign from the mining complex. So that is my analysis for the post Federal Reserve interest rate rise. I hope you'll stay with me in the weeks and months to come. I try to produce these videos twice a week so that we can have a clear understanding of what is actually happening in these markets. Thank you again for joining me. See you this weekend.